You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, that music means it is time once again for the option block. This time a little bit different. We sound a little bit different because we are doing it live here from scenic, and not sunny today and not warm, but scenic Chicago here in Benny's Chop House. We're doing it live. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. And we don't get to do this often enough. I think the last time we did it was about 3 years ago, so clearly we need to do it more often. A lot of people are always writing in saying, hey, can we see you guys do it live? Do you do a show live? Can we come into the studio? We always say no, but this time we said yes. We said we want to do it live. If you have any questions or comments about the accommodations, blame Mark Sebastian. He set it all up, so it's up to him.
This is a beautiful place. This is
it is
not getting any
excellent,
better than here.
Excellent. Well done, sir.
By the
better
way,
than the basement of Elephant Castle like last time.
if you want to order dinner, it's on Mark tonight. So the opus, the steaks, Mark's picking it up. So.
Surf and turf to go for everyone.
Get an extra bottle of opus to go, please. Yeah. Well, but that isn't a big crowd anymore. So
actually, the floor is here right now. Tubby's here. That's it.
It's only 3 bottles. So
you haven't even started the show yet, listeners, and already we're getting rowdy with a few beverages into it. Next to me on the left, wearing, I can testify, listeners, a very jaunty cap, is none other than the Viceroy himself, Mr. Alex Jacobson. Alex, welcome to your first live option block.
Hey,
welcome to it, sir.
Mark, it's good to be here, and I'm going to take some time and do something unconventional. I want to do a shout-out to a friend and a great option educator. Many of you know I worked at the CBOE. I started the Options Institute, and many years back I hired a young man who, he and I are not young men anymore, by the name of Jimmy Bittman. Jimmy had a stroke last Wednesday, and his prognosis is very good. He's out at Resurrection Hospital, which is out like Addison and Harlem. And I want to kind of go off topic for a little bit and just give a shout out to Jimmy. He's been in a week yesterday and still has some swelling and some stuff. I don't want to get graphic about Jim's medical stuff, but a shout out to Jim. Good guy, very devoted educator, and get well soon, Jimmy. And I know he listens to the show. I know other people at CBOE listen to the show. So get well quick, Jimmy.
Yeah, I think everyone here knows Jim. He was just on our Options Bootcamp program about a month or two ago. So I'm very, very. In fact, we were just going to reach out to bring him back on. So I'm very surprised to hear that, and hopefully he is indeed doing better.
Yeah, get well soon, Jim.
Yeah, we love you, Jim.
And next to Mr. Viceroy is Uncle Mike Tusaw. He rode the horse and buggy all the way in from St. Charles, so at least we don't have to worry about your Skype issues today, Uncle Mike. So welcome to the live show to you as well, sir.
Always happy to be here. And so now, when I'm in Chicago, that means there's going to be no technological problems at all. It's all guaranteed to work right, huh?
Just check his mic. Check his mic. Does it work?
Oh, wait, I'm sorry. You were muted for the entire show. I'm sorry. I don't know how that happened. and sitting next to him, pulling up the special guest star chair, he's supposed to have yet another special guest star who at the last minute couldn't make it, but this person ably filled in. He is Mr. Mark Shepard from Derivative Strategy Consulting. You may remember him from his periodic appearances on Volatility Views and a few of our other programs. Mark was planning to just come in and enjoy the show as one of the listeners, and I rudely roped him onto the panel. So he is not prepared at all, and is deer in the headlights look, and I love it. So Mark, welcome to the program, sir.
Thanks a lot, Mark. I'm never really prepared, but as long as we can have a cold beverage, I think we'll be all right.
You say that as if any of us ever are prepared.
Yes, this whole show is off the cuff. I'm not sure if you ever heard it before, but preparation is the farthest thing from what we do. And speaking of no preparation, sitting next to him, Mr. Mark Sebastian from OptionPit.com, the man who arranged all these fine accommodations today. So well done, sir. I wasn't sure what to expect when I rolled up. After all, you had planned it, but so far so good.
Excuse me, I do have some preparation. It's called Preparation H.
I stand corrected.
And it's a handy thing. You're welcome.
If you guys want to leave now, it's going to be the quality of the humor we're going to have the entire time. So
the rabbit
that's pretty
hole.
much it.
We're going down the rabbit hole already.
Yes. And on the end of the table, coming in all the way from Maine for his first live option block as well, not beaming in today, but actually live in person here in Chicago, the Rock Lobster himself, Mr. Andrew Giovinazzi. Andrew, welcome to the live program. Good to see you in person and not across a Skype connection.
Thank you. Actually, I spent a little time at the CBOE, my old stomping grounds today, so it's good to be back. It's good to talk to some of my Option Pit customers and hang out with you fine people and basically eat steak on Mark tonight. I'm really, really, really looking forward to that.
And Opus. Don't forget the Opus.
Surf and turf for all of us. All right. With the panel assembled, may have some other special guest stars rolling in later on in the show, but we're going to keep rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, now that everyone is woken up from their little naps here, their little siestas, we can dive into the top of the show, which is indeed the trading block. And of course, it figures that on a live day, it really would be a day when pretty much everything is unched across the board. All the major indices are unched. Vol is unched. So we won't be going in that direction. Maybe perhaps we'll start with some of the other stuff. Maybe we'll start as we are wont to do by kind of giving our little individual rundowns. We'll go down the table here. Alex, we'll start with you. What, if anything, caught your eye in today's myriad, indeed explosion of activity?
So I think you've covered it actually pretty well. There simply was...
That's it. We can all go home.
Yeah, there wasn't a lot of activity today. I mean, normally at OX, there are about a handful, 8 or 10 names that constitute a large part of the business. The only one that really had a trade lift today was kind of a blast from the past, Lululemon. Stock had surprisingly good earnings and popped, last time I looked at it, about 6 points, almost a 15% move. Now, I left the OX offices before the market closed, but that's a stock that, if you look in OX customer portfolios, was just the stock of choice throughout most of 2012 and 2013. That has obviously been replaced by Apple, but the pop in Lulu today brought some of the diehards, folks who still had it in their account, what we affectionately call in the business kind of living dead money, but it brought some of them back into the marketplace, and there was a little flurry of activity there. But other than that, it was a fairly uneventful day.
Well, I got a surprise for you for the live show today, Alex. A little bit later, we're going to be playing our favorite guessing game, the Trading Patterns guessing game, and we will be featuring Lulu in that. So
yeah, it's almost up to the price of a pair of one of their
yoga
pants.
Their invisible yoga pants.
I would say it was sheer genius, the report today.
Oh yes. There we go. We were waiting for that one.
If you were
We need more.
Pun intended.
if you were short calls, you
Don't even.
You
don't
took it
even,
in the shorts.
Don't even
That's
go
what he's
wherever
saying.
you're
You took it
going.
in the shorts.
Let's just
That's
top
what you
that.
wanted.
We need more sound
All right.
effects.
Well,
on
you
the
knew
show.
where I was going, folks.
Trading naked again?
You did invoke Apple, Alex, so that means we do have to toss it to you. And the person who's sitting next to you, the right person to toss it to. Uncle Mike, it's been a pretty busy week for your favorite holding, of course. The iWatch, Apple Watch, whatever they're calling it, Apple Payments, mega phones, the whole 9 yards. Stock breaking the 100 handle, now rallying back over it again. What's your take on what came out this week, and what, if anything, has it done to your strategies as a result? Are you repositioning? Are you more bullish? Are you less bullish? What's your take here?
Quite a bit, actually. Going into the day, I was short a put spread on Apple, and so I got out of it shortly before the announcement on the run-up. Right as Apple was getting ready to make the announcement, or right as they were making, as the presentation was happening, Apple was coming down a little bit. That would have been a phenomenal day to be a day trader. I was thinking of Grigas a lot during that time frame. And so right now I'm just long stock, long puts, and I'd like to see a little bit more conviction. I'd like to see some new highs over the 103 and some change level to where I'll start selling some more puts against it. But for the time being, it's like Apple at 100, SPY at 200, SPX at 2,000. We have these magnet numbers across the board. So for the time being, I'll just be holding off. But I'd like to get more bullish, but I'd like to see it start to run up a little bit to where it was a little over a week ago, before when it was at the 103 level again.
And you can't see, listeners, but Uncle Mike is wearing a prototype, one of the few prototype Apple iWatches right now as we speak. He has it closely guarded under his sleeve, but he's one of the few. He's so devoted, he got one of the early prototypes.
I actually had a prototype. I tweeted out a picture of myself wearing the prototype.
Oh, yeah.
That I was a beta tester.
I don't even want to know what this thing
So
was.
yeah, go on Twitter at OptionPit if you want to see what I was wearing. It looks it's pretty sweet.
By the way, I was looking at our iTunes feedback the other day for whatever reason. It seemed like the only negatives we got were when we slammed Apple.
Yeah,
so there we
yeah.
go. We just got a couple more as a result of that.
Fanboys
Yeah, I saw
getting
that, 'cause
upset when you slam Apple?
I was thinking about that. How can anyone hate the show because we slam Apple so much? Do you mute me? You really do mute me, don't you?
I must mute
I guess
you.
so.
We have the most diehard Apple guy on the show, and apparently that's not enough.
He
for
doesn't
the
count.
zealots.
Two-side doesn't count. You know why? Because we can never hear him on the show.
That's true.
That's the problem.
The Skype
He is
drops you
talking in
mercilessly.
mute.
I guess I need to buy a Mac.
Yeah, it always sounds like Apple, and I think they're just injecting hate.
Yeah, I hate Apple.
That
Yeah.
must be it.
Well, if it wasn't confusing enough with 2 marks, now we have 3 marks on the panel, 2 of them being Mark S's. So the first Mark S, sitting next to Uncle Mike, what, if anything, caught your eye in today's activity, sir?
Yeah, I would agree. It's eerily quiet out there, but I'll take it to the interest rate realm. I think the 10-year at 2.53 or something like that. People are starting to get very tense and talking about, oh my gosh, interest rates are going to go higher. But I think that would be that should show a very positive impact for our economy. So I really don't know why all the pundits out there on other talk shows or whatever are really concerned with the rise in interest rates, especially if the velocity is going to be fairly slow. So I would look to that as well as the dollar rise. I am concerned about the euro below 129, but those are just some multi-asset class points that I'm looking at currently.
Mark, how low do you think the euro could go?
Well, let's hope it doesn't test 120 like a couple years ago, but certainly I think a test of 126.5. If we don't see some more positive actions or some other kind of good signs from the Europeans.
Right.
Yeah, I was gonna throw it to one of our option pick clients who hates the euro. Misha, how low is it gonna go?
So
There we go.
So think about this. Think about the fact that the day the euro was created, anybody remember what it was trading at?
Wasn't it? It was a discount to the dollar.
80 cents.
Yeah.
80 cents. And everybody thought it was overpriced. And as long as we're all option folks, one of the great things about trading foreign exchange is they tend to be in macro trends. So it's not a lot of 3-day stuff and 5-day stuff. When they puke and when they run up, they tend to give you a lot of trading opportunities. So I'm also somebody who thinks Europe is going to roll over into recession, and it wouldn't surprise me to see it trading below parity. Back to the 87.
So you're saying I should put off my European vacation?
And let me
Takes your parity and raises you.
No, Mark. Please take your vacation. Wait a minute. What does that mean? Why is everybody laughing? The reality of foreign exchange options is nobody seems to trade them. They trade on the CME a little bit, and we tried to market one when I was at the ISC. But the macro hedge funds are big FX traders. I mean, they tend to do, they're big in oil, they're big in FX, and they tend to buy stuff for macro trends. And it certainly looks like the euro could trade materially lower from this point. Especially if they, I'm sorry.
Oh, no, good.
Especially if they roll over into recession.
It's funny you mentioned those ISE. They had, what was it, the world currency, or I forget.
The
Philly had one,
Philly had
and you guys had the other one, and they were inverse of each other.
Yeah.
But they were both great ideas. They were both attempts to get currency relevant to a securities account, and you can actually put it in a securities account. And
Right.
both of them, for whatever reason, withered and died on the vine.
In retail, there's never, because I was also at CBOE when CBOE did a currency option that actually traded a couple 100,000 a day. And now some of you are saying, what? When? This is 86. They were in post 5, and we had a currency option that traded a battery of currency options that traded a couple 100,000 a day. The exchange actually paid market makers to trade it. There was an incentive to trade it, and I got to travel the world.
Those were the days.
I was thinking the same thing.
I got to travel the world on that product, and we sold that product. We gave it to the Philadelphia. You say to yourself, would an exchange delist something trading 100,000 a day today? I mean, CBOE just didn't have the patience with it. And the OEX, which was, of course, one pit away, was trading $1 million a day. So nobody really wanted to deal with currency options, but
were they like, what the heck? This isn't American style. I can't do a big, huge exercise play in foreign currency.
There were lots.
Is that what the story was?
Well, there were lots of interesting challenges. Mostly the fact that the clearinghouses couldn't figure out how to clear it, but it was the 80s. It was much different. But if you're a macro trader, it's really interesting to watch FX because the trends tend to run for a while.
Most exchanges today would slaughter their children for a product that did 100,000 contracts a day. So that definitely different.
Are you
different
saying
times.
the CBOE would slaughter C2?
I think they already did. Speaking of slaughtering things, Mark, what caught your eye? The other Mark asked there. What else? What caught your eye amongst all the things you were doing today, giving tours and all that fun stuff?
Actually, one of the things we did, we sat around and kind of all were trading around together. A stock that caught our eye was WB, not Wachovia Bank, who's now defunct. What was it? It was like
Warner Brothers?
Weibo Incorporated, and
My favorite.
It was stock that was trading about 400 to 500,000 shares a day a week ago, and in the last couple days that has spiked to over 5 million. And it is the latest GoPro short squeeze.
I was gonna say it sounds like a short squeeze.
And so we were playing around with that one. The other thing is that this morning there was for a second there it looked like the market was going to fall off the rails, and by that I mean actually move more than 10 points. And VIX futures were moving, the VIX was moving, S&P was down close to 10, and then all the buy orders hit and. Right back up. We ended up like up a buck and change, and
essentially
VIX was down in the day. The other piece is over the last couple of weeks, even as realized volatility is absolutely tanked. So as of I was looking at this yesterday, 10-day realized vol was below 5%. 20-day realized volatility was below 6%. 30-day realized volatility was below 10%. And yet the VIX had gone from 11 to 13. Yeah. And so there was this weird little divergence that somebody is going to come in and smack, or somebody's right in the market and the market's gonna have a tank job. my guess is the former, not the latter.
So it's amazing. You know, we always joke about this on the show, but you know, the VIX traders are always undone by basic math. You know, and you hear things like that what the realized vol actually is. It's amazing. You're right that they're not crushing this thing even more. But there is that reticence out there. At a certain point, they have to buy it. Mr. Andrews, is that your take as well? Were you too busy giving tours to watch the market today?
Well, we were giving some tours. Actually, the funny thing was because we were at room 4B in the CBOE, and you could see the whole floor. And I was trying to explain, you know, to our clients, okay, is that real noise? You know, is that actually the market going down noise? And then we're looking at the TV, and no, all the traders are just looking at some woman on the TV. You know, so
that sounds right.
I'll just tell you that was the loudest action of the day.
That sounds exactly right. Did you guys happen to make a detour by the old Intel pit? I wouldn't be surprised if you didn't know.
There is no old Intel.
It's
no
completely
Intel
dismantled.
pit.
Now.
Oh, yeah. I was
not even a screen.
I was pointing out the yellow tape on the floor, and how, you know, that you used to have to stand inside of that so that people could walk through, and how, you know, there's literally nobody. Who was it? I think it was who were we talking to? Was that Dogs that basically said, that's Apple right there, one market maker and a Timber Hill specialist that was basically sitting there reading the paper.
That sounds about right.
Can I cross this? Yeah, go
I
ahead.
feel bad for all you guys who are just seeing it now, you know, because that's kind of your perception of what it was. Yet, you know, not that long ago, it was a place to behold, and there were things actually being done down there. And now it's just you can get all the office space you want down there on the floor. It's become office space.
I'm debating doing that.
I'm sure you are.
My question is, why aren't we doing this live from the floor every
It'd be
week?
It'd be quieter than here.
And the space would be cheaper.
Yes, that would be true.
Yeah, and they don't let me back in anymore. So
yeah, that's true.
That's one of the problems.
Yeah, you're on the blacklist.
Actually, if we just put another hat on Alex, I think we could sneak him in. We just need a big hat.
Whoa.
Get a sombrero.
So they let me on the floor in Alex's band? How does that work?
Doesn't it amaze you?
It's unbelievable.
He went to the dark side.
I mean, I'm banned from everywhere but the CBOE.
Yeah.
Well, speaking of CBOE, we'll give them some love. They did announce a new product recently in our realm of what we like to talk about. It is, of course, yet another attempt to extend the VIX franchise. They've had many of these in the past. For whatever reason, pretty much all of them, including VXST, have... I won't say VXST has withered and died yet, but it's certainly... It is whimpering. It is, okay, so there you go. One good day amongst the last few months.
That was a 500 contract trade and then the correction for the error.
That's why they won't let you back in. That's why they won't let you back in right there.
I can't even walk down Van Buren without...
But I'd imagine this would interest you, Alice, because you're always going on about the macro and the 10-year, and the new product is indeed their 10-year U.S. Treasury Note Volatility Index, going to be ticker symbol VXTY, and then some other garbage at the end of it.
Yeah,
there.
it looks like somebody just kind of accidentally typed
this doesn't seem like a real symbol. I'll have to check it later. According to them, it's VXTY-NSM. I'm not sure many platforms are going to handle
I believe
that
that's
quote.
NSF, NSFW,
yes,
not safe
exactly.
for work.
But Alex, this must excite you. This is right up your alley.
Yeah, I mean, in all seriousness, I like the volatility products, and at OX we've built a whole suite of tools around the CBOE volatility products, and it's been a very successful suite of tools, and I'm surprised that more of them haven't gotten traction and haven't developed some liquidity, but I think it's brilliant. I think the concept of creating a new asset class and now finally carrying it over to the debt products is a terrific idea from a quantitative standpoint. Now, the question mark will be, can you bring that business down from upstairs? And that's the success story of the VIX was the ability to develop traction in a product that pretty much traded upstairs already. And that will be the challenge, and that has been the challenge in all of these other VIX benchmark metrics. And they, to date, haven't seemed to gotten any traction. I think it's a brilliant product.
I agree. I think with bonds at the levels with which they're at right now, I think they might be able to generate some interest, because it seems everyone and their uncle thinks that bonds are going to go down now because they've been going up the last year or so, and because of, the fact that interest rates are obviously going to go up like everyone says that they're going to. Everyone's bearish on bonds. I think that product could definitely get some traction in one way, shape, or form.
We were talking about this one today, and one of the things that my friend Russell Rose was saying was that that's something that could see a lot of traction in and out of Fed meetings, in and out of Euro meetings. Now, the other piece of news involving VIX stuff was that they're actually throwing out part of the calculation methodology, and they're moving away from the 2 standard months and into just using 2 weeklies now to calculate the VIX.
Well, they were adding the weeklies in, but now they're doing away with the...
No, the way it's going to work now is the contract that is inside of 4 weeks and the contract that's outside of 4 weeks are going to be used to average and create the VIX.
The 3 and the 5 weeks.
Yeah.
Yeah, because when we talked about it on the show the other day, I got a lot of feedback from folks, and they said, you're going to use the 1 week, and I think we misunderstood that.
Right. No.
We did. We did.
Yeah, that was the initial impression everyone had.
So they're going to use the 3 and the 5 to get a better sort of scope on the...
That makes more sense.
So the new VIX calculation, the 2 contracts involved, the fewest days to expiration that the contract involved will have is 23 days, and most is 37. So you're no longer dealing with a product that has like 9 days to expiration.
That would have been
and
insanity.
37, and they're not going to have to do the where they have to extrapolate. All the extrapolations now out of the index. It's going to be really cool. Now, one of the there's a lot of cool things that are kind of being murmured about the reason for this methodology, which, if people can draw their own conclusions on.
Carpet bombing?
Yeah. So I think I think it's a really good idea, and I'm excited that they're doing this. I think it'll smooth out the VIX a little bit as well.
Yeah, it makes sense because before, what they were talking about sounded like it was going to make the VIX just maybe more fun to watch and trade, but it was going to be just a beast. You added that 9-day, that vol in all of a sudden. Mark, you talk to a lot of the institutional clients, the other Mark S, excuse me. Does this stuff have any traction for them at all, or is this way over their head, let alone anything VIX related, let alone a VIX on the 10-year like this?
Yeah, I think that the institutional clients as well, as long as you educate them properly and can show them the risk methodology, it could be a great product. Now, where there may be some complications in there is if you're an institution and you're trading a futures product, then would you necessarily want to look at a VIX product that's a security product? So, and then how would that become part of the overall strategy? How would that become part of your risk management? So those are going to have to be some integrative questions that the strategist and risk manager are going to have to address when those products come aboard.
I'd imagine walking in the door and pitching them on a product that at least has the VIX name attached to it might smooth the road for you a little bit, as opposed to some esoteric, bond volatility thing you might otherwise be talking about with them.
Yeah, certainly. As long as you can show a client a product, an exchange traded product from the CBOE, from the Mercantile Exchange, that is going to have an impact on risk mitigation for their pension scheme, then I think it's an ideal way to discern that.
Well, since it is an inauspicious day here in American history that we're recording this on, I thought it would be interesting to revisit this topic a little bit again. I mentioned it to Andrew before the show. He said he's been hearing a lot of it again. I certainly anecdotally have as well. I thought this topic was kind of squashed and dead, and it seems like in the last few months I've seen it really bubbling up to the surface again. I've been asked about it a lot more in the last month than I can ever remember in the past decade, and that is pretty much the notion that there was some sort of dubious activity going on in options ahead of 9/11. I've heard it a variety of different ways. I've heard it initially. I remember hearing about it in the SPX. Those were the quote-unquote bin Laden puts. So there were some deep, out-of-the-money SPX puts going up that were kind of dubious. Since then, it seems like a lot of the attention has shifted away to the airline stocks. And a lot of people have been asking me, and maybe you guys too, about that lately, saying, hey, what was up with those trades in the airline stocks? I thought on a day like today, it might be worth kind of going into that a little bit. I pulled some stuff here before the show to kind of see exactly what we're talking about. What people are kind of up in arms about is that on... well, first off, before we even get into that, maybe we'll get some kind of... you've been around, I hate to say forever, Alex, but been around for a little while. You've obviously seen all this kind of stuff. Let's get some surface reactions to this stuff before we even dive into the meat of it.
So having worked at SROs and having worked at SROs or exchanges, having worked at an SRO on September 11th, let me give you some quick background. There is in the options industry a metric. When options were created in 1973, there were a series of anti-manipulation rules put in place, and they have evolved over time. But one of them back when we began trading options in '73 is you couldn't open an option position in an option trading for, get this, less than $0.50. You couldn't have an opening trade. That's gone away. But one of the things that we created when we created the option business is we created something called the Large Option Position Report, which is called the LOPR, but it's affectionately referred to as the Whopper report. So what happens is every night when OCC calculates open interest, they also do a run on concentration of positions, and the threshold is 200 or more to one side of the market in accounts acting in concert. So I'm probably telling a story that a lot of you didn't know, but options get surveilled. And if you're a clearing member and you have an account that has more than 200 in one account, I know the conspiracy starts. What if I just bought 1 in 200 accounts at 200 different firms? Would I sneak under the radar? So number one, you can't have a large position without being identified. And the LOPR report, if you have more than 200 open interest to one side of the market, that would mean short calls or long puts on the airline stocks. You have to deliver a Social Security or tax number of the account holder. Now, some of you are going to say, what if you don't deliver the Social Security or the tax number of the account holder? Anybody want to guess what happens if you don't deliver the Social Security number or the tax number?
They just hand it to you in cash.
Yeah, they just cut you a check, right?
What? It gets shut down. The position gets taken away. It gets taken away. So before the opening of business the next day. So let's talk about September 11th. The tragedy occurs on Tuesday. The markets don't reopen till Monday, right? OCC's alive. OCC's backup is outside of Chicago. OCC's alive. And what OCC does is they immediately run the LOPR report on every open contract, not just 200. They run the LOPR report on every open contract in the airline stocks. By the way, that's probably confidential, and I'll be unemployed tomorrow. But
no one's listening. It's just us here, Alex.
None of it was true.
10 years.
None of it was true. Andrew, you seem to have a story contrary to this.
No. I think you're killing the fact that somebody from Pakistan was trying to, buy puts ahead of time because he really didn't have a U.S. Social Security number.
But Alex, this was the guys that were doing all these illegal trades were also the ones that actually set the TNT at the bottom of the World Trade Center that bombed it.
Here's the thing. One person has gotten away with it once, and it was a day trade. One person has got away with it once. But if you're not kidding, and the account is in Pakistan, and it comes in via Goldman Sachs, Merrill Lynch, Charles Schwab, whatever, there has to be a LOPR report. If they can't identify a tax number, a Social Security number, the position is seized. It's gone. It's gone, and it's gone before the opening of business the next morning. So there's two stories that are absolute fiction.
Can I just take 1 second to say that I'm really annoyed that we're talking about such a serious subject and saying Whopper report over and over again?
It's LOPR, but it was nicknamed Whopper. In the old days, before electronics, it was called the blue page because it was a blue sheet and you had to fax it to OCC. So having worked at exchanges for a long time, there's two conspiracy stories that I hear 3 to 4 times a week. The 9/11 stories and the plunge protection team stories. And I can tell you that both are fiction.
What people seem to be fixating on these days was, in particular, looking at the airlines. And if you guys just put in, 9/11 puts or Bin Laden puts into your browser, you'll find all this stuff. A lot of it gets pretty crazy, but you can sort out some of the wheat from the chaff. And some people who seem to be a little bit more reputable are starting to talk about it again, which surprised me.
Well, they did it in the Bond movie. They did it in Casino Royale. And they talked about the bad guy buying $100 million worth of puts
I think you're right, yeah.
on the airline
And then they do it in Dark Knight, too. Didn't he take over?
It makes good TV. It makes
he took over
movie.
the Gotham Exchange.
Alex has killed it. I just want to let you know Alex has flushed it.
That's his role. He's
can.
the wet blanket of the program.
Yet again.
Anybody here ever work in compliance?
Thank God, no.
No.
We don't invite compliance people to our programs.
Here's the thing. It's a wonderful story. And I don't mean wonderful in the sense I'm making light of 9/11. People love these stories. You know, it's always a story. When I worked at the CBOE, I did lots and lots of public seminars, and you started to get the plunge protection stories. And people always knew somebody who knew somebody, and it was absolutely the Fed coming in at 2:59 Chicago time and buying 40,000 SPX calls. And of course, you'd get that story, and you'd come back to Chicago, and you'd go to the legal compliance people and say, tell me who it was. And they'd say, I can't tell you because you're business development. I know who it was, and it wasn't the government. And the great thing about these stories is you say, if it was the government, let's just for fun say it was the government, what brokerage house did they use? And why hasn't that broker been found dead in a car accident?
That's what the conspiracy people think. I think they said it was Alex Brown,
Bear
which has been acquired at the time since then. And apparently, what feeds their fodder is that the CEO apparently stepped down like the day or two after the attacks. And you hear all this other tinfoil hat stuff. What seems to have set them off again recently? People seem to have rediscovered the fact that on September 10th, the day before the attacks, obviously, the puts in American Airlines were through the roof. It was 4,516 puts to only 748 calls. That was pretty much a record spike for that year. There were other spikes. In June 15th, they had 1,100 puts. On June 19th, 3,000 puts. On April 16th, 1,000 puts. And on January 8th, 1,300 puts. So people are saying, well, that's clearly the biggest spike of puts over calls. Clearly something was dubious going on there. Of course, a lot of that stuff seems to belie the fact that American Airlines wasn't exactly doing well.
Yeah, it was already a cruddy stock. That's the thing you got to remember.
In that time frame, people, if you start digging around a little bit, you see, well, wait a minute, the stock was down 20% in just 2 months at that point. And if you start looking at the news that came out, some guy had a printout here of the news that came out a couple of days before saying American Airlines expecting significant losses in the quarter. They started cutting their earnings, always a good sign. So there were a lot of reasons that people would be legitimately wanting to buy these puts. Goldman downgraded them that day, the 10th as well. So there were a lot of things that fed into the reason why people would legitimately want to buy these puts. Same thing with United Airlines. All the airlines were pretty much in a tailspin. Goldman had downgraded, I think, the entire sector at that time. So if it doesn't take long to start looking beyond, the Goldman analyst cut his rating on the 10th. A lot of things seem to, at least on the airline stock side, seem to be flying in the face of, oh, clearly this is dubious. You look like you're ready to...
Well, I was just about to say, when have airline stocks really ever been a great investment? I mean, they get smacked by... Except lately, I guess, when now they're starting to charge us $25 for a piece of luggage. But, I mean, for years... the only guys that made money in airline stocks were the guys that took the companies public, and after that, they kind of really have sucked.
And you have an entire sector where they have essentially one risk, that's oil, and only one airline seems to ever want to hedge that, and that was Southwest.
Yeah. And there's only one commodity running out continually, and that is oil.
So what was the old saying? How do you become a $100 millionaire, or how do you become a millionaire? Have $100 million, buy an airline.
Yeah. Uncle Mike, anything to add to this conspiracy theory consortium here?
I was playing football back then. I don't know.
Well, people have gone on. The 9/11 Commission specifically addressed this, which that kind of surprised me. I haven't dug in to the nuances of that report. And they came out and said highly publicized allegations of insider trading in advance of 9/11 generally rest on reports of unusual pre-9/11 trading activity in companies whose stock plummeted after the attacks. Some usual trading did in fact occur, but each such trade proved to have an innocuous explanation. For example, the volume of put options, they go on to explain put options, blah, blah, blah. On December 6th and September 10th in American Airline, they were highly suspicious trading on their face, yet further investigation revealed that the trading had no connection with 9/11 whatsoever. A single U.S.-based institutional investor with no conceivable ties to Al-Qaeda purchased 95% of those puts on the 6th as part of a trading strategy that he did tied to stock. So he didn't do it one-to-one. He did 100,000 shares versus about 4,500 options. So he didn't do it one-to-one, but still, he's buying stock with it too. So that was their proof that this guy, if he was dubious, he probably wouldn't have touched the stock at the very least.
I feel like we're on an episode of Mythbusters right now.
Yes,
I feel like we busted this myth.
We are busting it.
Did we really land on the room? I'm going to poll the room. Did we bust this myth or not? Yes? No? No?
People will believe it forever.
Well, I'm glad you mentioned the futures, because that's where I kind of got pulled into this, was back in the day of the SPX one. And I had heard about the SPX puts. The airline ones I had heard, they were kind of debunked. And I had always heard post that there was a lot of in-the-money things. They mentioned here, including in-the-money calls that had went up in there. And we think in-the-money calls, that's kind of odd. I had heard since that it pretty much was a box that went up in the SPX around that same time that would lead to a lot of those in-the-money options trading. Of course, since then, they listed a bunch of studies here that a bunch of different academics have looked at this, particularly in the SPX. They kind of said that the 9/11 Commission even admitted that they couldn't look at SPX. They claimed the volume was too much for them. They couldn't parse it because they're not options guys, clearly. And there were some other studies that said, these guys here out of
Too much volume.
yeah, exactly.
There's too much volume. We can't
Chinese
look through it. It's too
scientists.
much.
They said their findings show that there was a
Hate when
significant
that happens.
abnormal increase.
You're going to spend a few $1 billion. I mean,
Yeah.
but that's too much volume.
Yeah, exactly. So more, just
Yeah, Henry Schwartz can do it every day.
Well, they didn't have trade alert back then. Maybe they should have done that. So a lot of these, according to these papers, they said they did find evidence of abnormal trading in out of the money, at the money, and in the money SPX index put options, as well as in the money SPX call options. That to me is what makes me think it was indeed a box. Because what other reason would you be trading deep in the money SPX?
I mean, it also could have been like a synthetic future traded in the pit against something else.
I mean, these guys clearly
There's all sorts of
these
different
guys clearly
things.
are not option sophisticates. So something like that would probably throw them off.
Yeah.
Could you imagine if we had the odd block back then?
It would have been something, yeah.
That would have been a fun
It
odd
makes
block
me
show.
wonder if I had a few weeks of free time to just sit down and perhaps write up the definitive debunking of all this stuff. Because it seems like no one has done that. Maybe insiders should do that. I don't think we have the team time to devote to all this.
Well,
the problem is you wouldn't sell a single book.
yeah, on the
no
website. I don't need to sell any
conspiracy.
books.
So keep in mind, the folks who really know about it at OCC and in the surveillance of the exchanges aren't really going to talk about it. In '87, the tax laws were such that boxes were very advantageous.
Yes.
And I don't want to get into tax law, but
Please, let's do it. The tax block.
We did billions of dollars in
The tax
notional
block.
in the SPX back then because of a tax law that has subsequently changed, where the gain in the box was considered capital gain. And get this, drug companies and technology companies who had manufacturing facilities in Puerto Rico, which is, by the way, if you look at Apple and you look at companies like Merck, when this tax law was out there, everything was in Puerto Rico. But essentially, you could offset the losses in your Puerto Rican facility with capital gains in the SPX and have no tax effect.
This is what I love having on the show, Alex.
It's arcane.
Your grasp of the arcane minutiae of the options world is exceeded by no one.
It's
amazing.
arcane crap.
All right, Andrew, to your point, I think
Alex wins.
Yes, he does.
Alex wins.
I think we've debunked it enough. I wanted to bring it up because it does seem like it has, for whatever reason, resurfaced again in some otherwise legitimate outlets that I had thought this had been.
It could be because today is September 11th.
Well, not just today, I'm saying, but in the months leading up to it. Because obviously we've been doing this for a number of years now,
Right.
and these stories haven't resurfaced until whatever reason this year. So
Well,
it
you know,
might be worth.
it's the 13th anniversary.
Yes.
Or no, it's the 12th.
It's
It's
yes.
the 12th.
Basic math is hard. I know.
Yeah.
All right,
Is it? It is the
Let's-
13th. It's the 13th.
Mr. Andrew, I think
No.
you're right. I think we'll get into
Complex derivatives trader here, folks.
let's get into some real unusual activity and get into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it's time once again for the odd block. By the way, all you guys standing around, we're going to have a mail block, listener question block a little bit later, so you get your questions ready while you're standing there. We can at least reward you. If you ask some good questions, maybe you win a fun tchotchke. These Options Express hats and shirts are collector's items. They don't exist anymore. They don't say Schwab on them, so get them while they're hot. And maybe you can even use Mark's book to light a fire or something. There's a lot of things you could do with these great tchotchkes we have
You know,
over here.
Only people with a drink, though, can ask a question. That's the rule. That's
It's
the
been
rule.
used as a self-defense object
I've heard
before.
that. I've heard that.
You know?
Has your wife thrown it at you a few times?
Yeah, yeah.
And of course,
the funny thing is, my wife's here. It's the first time she's ever heard the podcast.
I don't blame her. And if you ask a really good question, maybe you can win a cool Options Insider Super Tea. So we'll save those for the really good ones. The weak ones, they get a bottle opener or maybe Mark's book, and we'll kind of go up from there. All right, so we'll start off odd block. Andrew, let's start in Russia, as we are wont to do here. RSX not surprising that someone would want to come in and maybe spec on some downside in RSX. So this one, I probably file this and under the least surprising, unusual activity we have today. But what we saw in particular, of course, RSX trading down a little bit today, at around 24.5 when we profiled this morning on the site. And RSX, of course, the Market Vectors Russia ETF. We saw someone coming in and speccing pretty hard on some pretty near-term downside to the tune of the OCK 22-24 put spread going up, paper buying for 55 cents. So they were buying 24, obviously selling the 22. Open interest on both of those strikes, pretty nominal, 500 and about a little over 1,000. Went up in 2 blocks, like I said, for a total of 5,400 contracts. It doesn't look on the surface like this is a long underlying guy, because if you were, you wouldn't be doing this. This seems like a straight up, like it looks like, out of the money downside spec here in Russia going in the toilet, at least, or Ukraine. What's your take here, Mr. Rock Lobster?
I think tomorrow maybe the sanctions are supposed to bite, and we all know that Putin he's been running scared about the sanctions. He's deeply feared for the economy of his country. I think this trade feels almost a little late. Like maybe
I had the same thought. I was like, this guy should have been in a little bit while.
I don't know. Maybe I've heard he's gonna Putin it to him.
Oh God, the pun block. Boo. You made your wife come hear this.
Yeah, I know.
This is terrible, sir.
Not a bad risk reward for the trade, but unless the sanctions really bite, which if you look at just the history of the RSX this year, 22 has been pretty much the dead low. It would all have to come on down, and I just don't think Europe has the stomach for this trade to actually. They might make some money on this. Let's just give them a shot at it, but I think really for this trade to make some money, it's such a short-term trade. The RSX really has to tank, and I think the tanking is pretty much out of that product at this point.
No, I'm with him.
But you're right. We looked at a chart of this morning after we put this up on the site, and you're right. It seemed like there were myriad other opportunities that this would have been a better time to put on. Maybe this guy's just late to the party and saying, well, the 15th time is the charm, apparently. I don't know.
Right. This will be the time when the Russian stock market really collapses,
really.
Because
they
Putin
mean it this
really
time.
Screws up, and everybody really puts the screws to Putin, and it's just not going to happen.
Maybe he was expecting something to happen on the anniversary of 9/11.
There you go. Yeah. These could be the Putin puts. We'll look back in history on these and be like, well, this guy knew something.
That's right.
We'll be
right
talking
here
about
on
this
the odd block.
13 years from
Putin's
now. We'll be
hedging himself.
Yeah,
What did
it's like
Putin know?
maybe tomorrow Europe will be like the Grinch Stole Christmas. Their spine is 3 sizes too small. Suddenly grows.
They'll get a heart.
I wouldn't touch that with a 37.5 foot pole.
We're going to say something else. It wasn't hard.
The cheap seats enjoying that humor. Let's just move on from that one. That was not good. All right, let's move on to
Next.
I know my favorite name that I watch every morning. This is Control 4 Corp. Ticker symbol Control. I give them points for having a relevant ticker. Some of these names you see, their name is XYZ Corp, and their ticker is, BBY or something crazy.
That is your pet peeve on the show.
It
though.
is. It drives
You
me
hate
crazy.
that.
It drives me crazy. Make your ticker relevant to what you're doing. Anyway, they're trading about 14.5. So not the most pricey name we talk about, but we like some cheapies. Certainly not the cheapest name we talk about on the odd block, not by a long block.
No, at least it's above $1.
Yeah,
Yes.
yes, exactly. So we don't offend Alex. We should do a special cheap one just to see his face, because I'm sure he'd be deeply offended if we get below $3.
I only want to do it live though.
Yeah.
I have to see his face.
I want to
really
see
get the
someone
full
buying
value.
10,000 50-cent calls on a $3 stock. That's then just to see him just
that you mean the Longo special?
Yes, exactly. Just to get so disgusted.
Might as well ratio it off with some 75-cent
Yes,
calls,
there we
too.
go. Just to storm out here in disgust. What we saw here in this one was a little bit different, a little bit longer term paper, looking out to Jan, and it seems like pretty much our standard upside buy with a little bit of a caveat that it's a little bit longer term. These were the Jan 17 halves going up for 85 cents. Paper buying them. They went up in one block when we profiled them of about 600 contracts. Looks like quite a few more piled into the strike after the fact, over 1,300, about 3x what we talked about earlier in the day. We also saw some people buying the OCK 17s. I believe there was some open interest there, so it raised the question of whether they were maybe rolling out from OCK 17 half to Jan. So that could have been a possibility there, or it could have been someone just buying premium across the board, the old Tusaw-esque time stupid. Where do you fall on this one, Mr. Andrew?
Actually, the thing that was even remotely interesting was the fact that the IV is trading kind of, we'll call it in the upper 15% of the range. So with the stock trading at the very bottom of the range, so there are certainly some real call spec, people buying calls, bidding the vol up. Generally, that means we're looking for a little bounce in the stock. I think the stock was in the 25 or 30 handle at some point this year. So, again, an interesting, basically open call spec buy, what it looks like.
Some guy was really chasing. He paid 95 cents for some of those.
Exactly.
That guy was hurting almost instantly.
Yeah. And
they were offered at 85
right
immediately after.
Exactly. So
always a good feeling.
Again, but when they're buying calls like this in general, now they're picking the January part of the cycle. They're not buying OC, so there's some patience here. So we've seen a lot worse call buys than this. Let's put it that way. So
we've seen people paying up for weeklies or dailies at some point. So we've seen a lot of good stuff, good in quotes. Moving on to some interesting good stuff here. Talking about good stuff. This is Autodesk. We've talked about them before. Ticker, of course, ADSK. They're trading right around 53.5 today on the upper portion of their 52-week range. What we saw was someone thinking, hey, there's more to go on the upside here. To the tune of some
just a little.
Yeah, to the tune of some pretty significant size. We saw someone coming in on the OC and the OC expiration cycle loading up on the OC double 60-65 call fly. Don't see too many of those. Going up about 5,000 by 10,000 by 5,000. It looks like some more filtered in after the fact. It was kind of on a weird ratio.
I'm wondering what this guy was an option pick client, because we've looked at Autodesk and had that exact trade on.
Maybe that's why it sounds familiar to me. I don't know.
I love Autodesk, and that's one where it's one of those momentum names that I think at some point it's going to run to 58, 59. So. Fly's with the vol there. Fly's a cheap way to play this.
But this is way too little size for a lot of your clients.
My only
They're doing 10,000 at a clip.
He did the 55. He didn't do the 55, 60, 70 for a credit.
Oh, there we go.
That would have been my play.
Mark, looks like you had something else you wanted to add there. Other Mark.
I was just going to say, make sure that wasn't supposed to go into the practice account.
Oh, well, there you go. That would be good size for the practice account.
Practice? What you talk about practice?
They put it up. They put it up for a debit of 75 cents. Open interest is pretty sizable on these strikes. 11,000 by 4,000 by 20,000. Went up in pretty much three large chunks. Not surprising. It's a three-legged trade, so they probably papered it up that way. And again, it looks like customer pretty much buying to open. Doesn't look like anything else really went up with this, any stock or anything like that. So it appears like it is on the surface here, Andrew. This guy just loading up on some upside, and he wants a nice gradual roll up to 60.
I know. It's almost like a textbook. Okay, I read the book. You buy a butterfly. The stock goes up. It goes to 60. It stops. I make money. And that's pretty much what this trade looks like. I don't see anything else around that. And because Autodesk kind of moves up, moves down, it doesn't really go very far. It's probably the right type of trade for this, but that's a pretty big size for kind of a stop in that range. I have to say, that's not a small bet.
He's not playing around.
That's not playing around.
So yeah, that's an interesting one. If you're looking at some names to keep an eye on, listeners, that might be a fun one to watch, because this guy obviously putting a lot of money where his mouth is here. That Autodesk is due to extend the upper portion of that 52-week range. We'll do a couple more here, looking at some long-term adjustments, perhaps rolls out here in Bank of America. Ticker symbol BAC. This one trading right around 16.5 today. Another one, like a lot of stocks these days, pushing the upper portion, the upper band of its 52-week range. And what we saw out here was, again, longer-term paper, in particular the Jan 2015 and 2016 17 call spread going up for $1.03, about just a hair shy of 20,000 times. So pretty much 40,000 contracts going up in this one spread. Not surprising, Bank of America, pretty active. ADV is about 260,000 contracts. So this one, open interest on the strike is pretty much well over 300,000 on each. So it's kind of hard to parse exactly where this open interest is coming from, but it seems like paper buying the 2016s, selling the 2015s, doing the old essentially roll, but not rolling up, just rolling on out, wants to buy himself another year or so for Bank of America to have that magical move he's waiting for.
Yeah, I think that's exactly it, and eventually you'll probably see the open interest all roll. So the open interest on the 2015s will move toward zero, and the open interest on the 16s will be 600,000. So somebody wants to get long, bank, really long.
We were going to do an express block, but Alex has suggested maybe since we have a lot of questions that people sent in who couldn't make it to the show. But I want to make sure you guys are here. You've been standing the whole show, so you guys get pride of place. So we'll jump into the mail block now, and then you guys, the hardy amongst you, can ask some questions. All right, here we go, sir.
It's time to take your seat on the all-star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
Like I said, this is a chance for you guys to join us here. We got some pretty extensive questions people have sent in, but I don't want to dive into those unless you guys are dispelled and spent from your day of touring the CBOE. So here's your chance. You want to shout out a question, by all means, now is your opportunity. Forever or forever hold your peace. Go ahead, Mike.
Mark, what's your take on the 52-week highs that you hit after a recession like we saw a couple of years ago? Now, how important is a 52-week high like Bank America that's probably some 20% of its value based on 5 or 6 years ago as compared to a normal section of 10 years of time?
So you're saying just how important is it that all these different names like Bank of America are essentially trending in the upper portion of the 52-week range? That's pretty much your question? You know, I think a lot of that is just like we said, we've been talking on this show forever. In aggregate, you know, we joke about the S&P being glued to 2,000, but it has been pretty much this magnet up to that level, and it has kind of risen all the tides. The tide has lifted all the boats with it. It seems like how many of the names you talk about these days across all sectors are pretty much brushing up against the upper portion of their 52-week range right now. I don't know if that's significant, or maybe that's perhaps significant on the other side if you're contrarian, that perhaps it's time to... I know you're the diehard bull amongst us, Uncle Mike. What's your take on that with everything pretty much approaching or right near the 52-week highs?
Well, I think with Bank of America in particular, that was one of the most hated stocks in existence a few years back. And so I think it's going to still be a while. I still think it's recovering from the public hatred of that stock from all that time. I don't own Bank of America, and I don't have a position on it. But in general, with a lot of the stocks approaching their 52-week high, I agree with Mark in that with the S&P at the 2,000 level, I think we are at a very key point right now, and my stops on this market are pretty tight at this point in time, to where I will pull the plug on a lot of things, even being the bull that I am.
Well, you know, one thing that that Matt brought up, Matt asked that great question. You know, there's a big difference between stocks that are at 52-week highs and kind of near all-time highs versus a Bank of America that's at a 52-week high but is way below where it was in 06, 07. Yeah. I think those
I remember it was 50.
I think those represent more interesting trading opportunities than, you know, the names that are at all-time highs while the S&P is at an all-time high. So I don't know.
You don't mean Apple, do you? You don't mean Apple, do you?
No, and Apple's not at an all-time high. Mark, the other Mark S, the Mark that doesn't have an AS in between the S. What are your thoughts on this?
Let me think about that now. Actually, as what everyone has mentioned, it provides institutional investors as well as everybody a perfect time to assess their portfolio and to make active risk mitigation trades. So if with volatility in the VIX, with all of these firms at 52-week highs, looking at their implied volatilities, I would be taking a very active approach, not only short term, but certainly looking out till 2015 and managing to a specific return for some of these stocks. There's no reason, if this market rolls over, there's no reason for you to be caught without a comprehensive hedging or risk mitigation plan in place.
Good comments, everybody. And we have some people, like I said, people wanted to write in who couldn't make it here in Chicago. So unless you guys have any other questions, I'll dive into some of the external ones.
Any
going
option
once,
pit people?
Going once, going twice.
Come on.
Let the bear give you courage.
Hey, we got one.
Okay. Step up to the microphone, sir.
Step up to the microphone.
Got a good Viceroy question.
I'm screwed.
You better put your hat back on for this one.
I better put more than a hat on.
Yeah.
So that
be jaunty.
I was listening with interest on your comment about the boxes and Puerto Rico. I've always wondered why people who have cash sitting around, you know, they're putting it in 90-day T-bills or just in cash, don't go buy SPX boxes and convert it into 60/40 income.
So it's an interesting question, but let's address it for a minute, right? Where should the box trade? It should trade for the risk-free rate.
The distance between the strikes minus the carry.
No. What rate? It should trade for the risk-free rate.
The rate out to the expiry of the box.
Right.
Yeah.
So it should trade for the risk-free rate, the swap rate. And to your point, the only advantage is 60-40, right? And there's friction. And there's friction. So if I'm Apple, if I'm Brayburn, right, Apple's hedge fund, and I'm sitting on, I don't know how much it is now, $100 billion in cash, right? You say to yourself, should they do the box? Should they do the 90-day box? Or should they buy the 90-day bill? And the answer is 60-40 doesn't do them any good. Doesn't do them any good, right? So they'd rather buy the bill and not have to explain to their board. Take a step back. When boxes got big, it was the only time in my career, other than 2008, I ever got the "is OCC safe" question. Because I was calling on people who were doing $1 billion of the box. And one brokerage, Kidder Peabody back then, was marketing this as institutional cash management. So, to your point, should I do the box? Should I be absolutely indifferent? Is 60-40 a benefit? 60-40 is not that much of a benefit. Many people view 60-40 as being in jeopardy because remember, with 60-40, you also get the mark-to-market rule on, and I want to be careful how I say this, anything that can look like the SPX. So it just isn't worth it for them. And as low as commissions are, the S&P isn't the low commission product. It's got an exchange fee attached to it. It's at least 60 to 70 cents to trade. So there's just a tad too much friction and a tad too much explanation to my board. And it's just easier to buy the 90-day for nothing than do the SPX and have friction and still get nothing.
And I just want to say it is impossible to stump the Viceroy.
So I do love the audience of this show. They will grasp onto the most, arcane minutia that we talk about. I love it. I was joking with you about boxes, but boxes get this audience going.
That was an option pick client,
So here's
by
the
the
thing.
way.
If you have a capital loss, the box has a monstrous advantage because the cash management income you take in is treated as a capital gain and would be tax-free. So to that customer, there's an advantage, but no one is working that customer anymore to any degree. Wall Street will structure a solution that's just as good in an upstairs product to give you that same capital gain.
Boxes were much sexier, back in, the early 2000s when rates were obviously high. So you had added incentive to do it in addition to just the tax consequences. Now, if you're going to push all those contracts through, pay all those commissions just for 60-40 tax treatment, like Alex said, I don't know if it's really, you're really chasing your tail
For
at that
0.5%
point.
or something.
Yeah, exactly. I mean, it's not really worth. But if rates get to 8-10% again, we'll probably see boxes starting to come in a lot again. We used to do a ton of boxes when I was out in the X. They seem to have really trailed off quite a bit. And including Bin Laden apparently loved a nice box too, before 9/11. So you never know.
I heard he was deep into the airline puts too,
Yes,
but I'm not
yes.
sure if that's true.
We
or
won't
not.
spread that around though. That's all. All right. Any other questions? Otherwise, I'm going to dive into this mega one here from. Here's a guy you'll like. This is a guy came in through iTunes. LivHK. I'm a relatively new listener. However, I had to turn off the show after 5 minutes. I am here to learn about option strategies, not listen to Apple-hating rhetorics, plural. I get it, you don't like Apple's platform, but at least show you are not ignorant of Apple products if you do decide to talk about it. I would love to hear your analysis on valuation, but a baseless claim that 3 years later the stock will definitely be worth a lot less than today. Such thoughtless comments leads me to seriously doubt the quality of the content on the main topic. So there you go. Winning friends and influencing people all the time, sir.
Who would say something like that?
Is that your comment there too, Saw? Is that you sneaking it in to get a little more
It was me,
shot?
I guess. All right, so apparently I must be muted on this show because of the fact that I've been criticized by this whole group about being an Apple from 400 up to 700 and then getting out at 620 and then getting back in the 400 level. That was the trade of my life. So listen to me if you don't like hearing about, if you don't like the banter that they give me on Apple.
He offsets all of us slamming iWatches and whatnot. All right, here's a nice quick one because the answer is pretty short. This one comes in from a guy just goes by the dubious handle of Charlie. He writes, I'm prepping for my Series 7. What should I expect from an options perspective? Any tips Sorry I couldn't be there in Chicago. Would have loved to see the show live, but this is the next best thing. Thanks for all that you do. So we got a number of guys out here who have Series 7s. You were involved in writing that one. Maybe we'll start down the table. Andrew, what do you have for our friend here?
Actually,
Mr. Charlie.
Taking the Series 7, which
you're actually taking it now, right?
Well, yeah, I already passed it all.
Yeah.
I know it's shocking I can pass it, right? I passed the 7 10 years ago.
Okay.
So just the Series 7, you got to know all the basic option stuff. You know, straddles, what's a call, what's a put.
Yeah.
They do mostly, okay, if the stock moves this much, is your call going to go up or down? Just a lot of basic option stuff. You know, when the exchange opens, when it closes, when stuff settles. Nothing actually really that's going to help people make any money. Just shows that you're not a total idiot and you understand what a call and a put is.
Well, from what I remember of it, too, they don't factor in volatility at all on that test. It's all expiration day.
Not one question.
What does that have to do with anything?
It's all expiration day style things. Like if the stock moves this much, how much will you make on the call? The assumption is it's based upon expiration. They also throw in some ratio spreads, too, ironically.
Really?
Yeah, I remember ratio spreads and expiration day math is what I remember.
So they don't want you to be net short units. That's what they want you to come away from that with.
Now, granted, it was 12 years ago when I took the test. But
First of all, understand today not everybody sees the same 7.
Yeah.
They jumble the questions. The two things you should study, in addition to what the guys have said already, are spreads and margin. Because margin is where they try to get you.
The Reg T stuff.
Yeah, margin is where they try to get you all over the tests. The 4, everything. I took the 7 so long ago, it was 6 7/8. That didn't get a laugh. So,
I caught it.
yeah, it was in fractions. So,
Alex, it's so hard for us when you actually tell the joke. We're not ready for it, man. I need one more beer before I can handle another joke for it.
We got time for, I think, maybe one more quick one here. Let's see. Unless anyone else in the crowd has gotten some courage from all their liquid refreshment. Let's go here with, let's have this guy who writes in a question for the Option Block crew. First, huge fan, so thank you. Comes from Tom. Second, question about the Wheel of Fun trade. Now, he asked about the Wheel of Fun, but he's talking about a collar, so I guess he got him a little bit backwards. He said, yeah, there you go. I was recently assigned on a short call in a collar position. Monday morning, I was long a protective put, a far out of the money leap, and decided to sell a weekly put that positioned me long about a 25 delta. Now I'm wondering how all this will affect my margin. From the margin perspective, is this a put spread or is this a naked short put? So he's got the long put, he's still in the Tusaw-esque, riding the short put and legging into kind of like the time spread that way. After I put this on, I realized the margin was a bit fuzzy. Since I just rolled out of a covered call, I'm obviously cash secured, but I want to work this out before I find my foot in a bear trap. Thanks, guys. Tusaw, you do this on a regular basis. Have you encountered any margin hiccups with this?
No, not at all. On that one, if you're long stock, long put, let's say you're long XYZ stock and long the January put below it, and you're short a weekly and you get called out on it, and you're just long the January put at this point, if you sell a put against it, it's actually going to, if you have a Reg T margin account, it's going to be even less of a maintenance requirement on that. So you won't run into any margin hiccups at all.
Assuming it's the same strike, the margin should actually...
You'll have a more favorable margin.
A little bit. Yeah, I mean, you're basically getting margined on the stock at that point, basically, right?
Yeah. And then if you have portfolio margin, that would be pretty much identical.
Yes.
Depending on your broker, but it would be... I don't see any reason why it wouldn't be identical at PM.
It just shows how much voodoo margin has become these days. We probably could do, it wouldn't be the most scintillating thing, but we probably could do a whole show on margin. Send us your trades. We'll tell you what the margin should be. Probably actually get a lot of listeners.
We could do a show on what the margin should be and what the margin is.
Yeah, what the margin is.
But does the guy just have an out of the money put time spread on now?
That's what he sounds like, yeah.
So I think it is a little short. I mean, it is a little short.
I guess
right?
he got called away, so he could not have the stock anymore. He said he got called away on the call,
so he
could not have the stock.
He could put he's got a toe in the bear trap. He doesn't have his whole foot though, right?
He's got long,
he's long 25 money puts, right?
Far out of the money leap, short weekly against it. He's long about 25 deltas. He got a sign on his short calls. I'm assuming that means the stock is gone.
So he's not long 25 deltas.
If he's long 20, I call that bogus delta. In that if it goes up a lot, the gamma is going to make that go away in that regard.
Indeed.
Bogus delta.
I like that. Bogus delta.
That's an advanced term.
Otherwise known as BD.
Well, we got a lot of you guys who wrote in, but we have to keep rolling with the show. So I appreciate all you guys who wrote in. We'll get to you guys we haven't gotten to, including some of these epic questions. on it. These people write in, they want a whole,
we need a riff.
They want a whole course.
When we get something really good, we need a riff that's like epic.
Yeah, we're like, okay, your question is now the entire show. This guy's bond portfolios, all kinds of fun stuff. All right, so we'll move on into then, because we're running low on time, we'll roll on into the around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Maybe we'll start at the end of the table and work back this way. So, Andrew, we'll start with you, sir. What is catching your eye in addition to looking forward to going back to Maine and fishing?
Actually, nothing. Going back to Maine and fishing is my number one priority. Actually, no, just... can we actually move? I call this kind of the Elmer Fudd market right now. It's like, which way do we go? Do we go down? Do we go up? I don't know which way we're going to go. Everything is stuck around the middle.
Doing voices on the show today. Wow, I'm really impressed.
Very of mice and many
you get him in person here, and the guy just opens up. It's amazing.
I know. What can I say? But just waiting for a reason for the market to move. I thought we'd get a little bit more pop from, maybe the president being a little more proactive against ISIS, trying to get the bad guys out of there. That's usually a little bullish. Didn't see it today. Maybe because the plan was a little bit, let's just call it opaque.
Vague. Yeah.
Vague. If it was a little more forceful, maybe we would have got the pop. But I'm still a bit of a closet bull on that, and I'm just waiting to see
jumping in on that
one?
Among
other things, he's a bit of closet on.
Once you invoke the closet, there's no going back in, sir.
That was so foolish. and with that, I'll just quietly.
You think you didn't work with the guy? You would know better.
I know. It's crazy. Oh yeah. So I'll tell you. Going back to where the show started, that VIX versus realized vol spread is just crazy wide right now. And I think there's some serious opportunity there, and something's got to give. Either the S&P has to start moving, or the VIX needs to drop. So, trade that I personally think is kind of interesting is kind of an S&P straddle versus a short VIX future or short VIX call spread, something like that. Kind of a, if you can
short the near portion of the VIX futures to get that little bit of backwardation.
Or heck. Long S&P straddle, short VXST future if there was any liquidity there.
I was going to say, good luck on that.
Which there's not. I think that spread is really interesting. On a news front, I don't see a lot of things that really excite me. I just think it's one of those things where it's going to be, unless interest rates make a really surprising move, or the euro does something nobody's expecting. I think the VIX is really overpriced.
You mentioned VXST getting a little bit of a pop from a volume perspective. Maybe we'll see more of that as people start piling into that to try to play a little bit of that disparity as well. Maybe that will finally be one of the catalysts amongst many, maybe ISIS, maybe Ukraine, to all that combining to maybe give some life to that contract.
And maybe I'll spontaneously grow 3 inches at the age of 36.
I'm just trying to be charitable on some of the other lesser loved products out there.
My wife's crossing her fingers.
The other Mark S. What else? What are you watching for the rest of this week, sir?
Sure. I think a narrative that I talked with both you and Mark last time I was on Volatility Views that I'm really actively watching are the political movements of the country. And I think now we're starting to see some polling with potentially the Republicans taking over the Senate. And I personally think that if the Republicans take over the Senate, take over Congress, of course, then we will see a pretty good-sized pop in the S&P. There have been some recent developments with Roberts in Kansas and the Democrat dropping out, and the independent polling very tied with Roberts. So I don't know if there'll necessarily be a Republican wave, but I'm really looking at the political process in our country to see where that'll lead the rest of the year.
I should mention, too, in addition to volatility consulting and all sorts of other strategy consulting, you also do a lot of political consulting and analysis over there, too. Some people might be surprised, where's he coming out of this? But that's actually a lot of what you do over there on a daily basis.
Well, I think the not only macroeconomics, but politics. Last year this time we were talking the sequestration is just such an active part of our focus in our country, and clients and everyone in general is always asking about, well, what's the bigger factor? Is it the Fed or is it the inability of Congress to put a coordinated package together? Those just all have to be topics that are discussed and looked at, I think.
They used to call me the coordinated package.
Oh, jeez. Other Mark asked, you're right, though. Politics are kind of very much the wild card. We talk fundamentals here. We talk vol. We talk technicals. But that's kind of that fudge factor that slips in there. You can't really graph. You can't really chart. You can't really do a lot of analysis. It's kind of almost, the whims of DC that we have to kind of deal with when we're trading these different things.
Speaking of nicknames, fudge factor.
All right, Tusa, save us here. This is obviously, you had the big event of your calendar year this week. What's left for you to kind of just to relax in St. Charles until the next
I
Apple
don't even know what I'm
earnings?
going to do. No, I'm Great Britain, the Fed, and just to enjoy the fact that the Bills are 1-0 and the Bears are 0-1.
You're rubbing that in. Boo. You realize that we're live. There are people here who are going to react to that.
What sport is that again?
What sport is that?
Boo. I've waited 15 years for this day.
Oh, good grief. All right, Alex. Now you have to save us.
Yeah, the benefit of going last. Scotland, the 10-year, and the November election. I agree on all three counts. I'm not 100% sure that rates are going to go up as much as people expect, and I think the marketplace is telling us that. By the way, if rates do go up, the euro will get crushed even faster. So I think the eyes are turning to Washington. I think that's spot on. And we'll look at the November election. Traditionally, I agree markets like Republicans, but every time we figure out what the market likes, it proves us wrong. So I think it's all macro issues at this point. And I like the market, but I think the market will react to the election polls as we get closer to November.
All right, that's going to do it for this live edition of the Around the Block. It's also going to do it for this live episode of the Option Block. But before we go really quickly, let's check in with each of our cohorts here, see what they have coming that may interest you down the pike. Alex, we'll start with you. What's coming down the pike from OX?
I'll just showcase one event, and that's Saturday, September 20th, Marina Del Rey. Jimmy Ruzan, I know there are a lot of folks here who worked with Jimmy. Jimmy Ruzan and his crew do that 3/4 of a day out there in the LA market. If any of you are from LA, I encourage you to attend. If you're not from LA, come to the site, optionsexpress.com, and the live events now are simulcast on the site. So it's just like being in the audience. You can interact, you can talk to Jimmy. So live event, 9:20, Marina Del Rey.
We forgot to mention, if you're here in the live audience today, you get a free trip to that Marina Del Rey event, courtesy of OX, right?
Right. And you can drink the bottle of Opus on the plane.
Just check in with Alex after
Jim
the show.
Roseanne, one of the brightest, smartest, nicest guys that I've met. Andrew actually...
That's not what you said before the show, sir.
The funny story is Andrew actually hired him for Group 1 when he was getting into the business.
It's your fault.
So it's all full circle.
All right, Tucson, what's coming down the pike over there
That
at
story will
RCM?
remain quiet.
It's September 22nd in Dallas. RCM Futures will be putting on an event. Go check it out. For more info on it, go to rcmfutures.com.
RCM will be sending you to Dallas if you came here live today, so check in with Uncle Mike after the show.
An American
for your
Airlines
free tickets
hub.
now to Marina Del Rey and Dallas. You're getting some good trips out of this trip.
It's from the money we made on the American Airlines.
All right, Mark, where are you sending people after the show here today?
Come see DSC at the Institutional Investor Options Panel, Four Seasons Hotel, October 8th. All sorts of thousands of institutional investors from across the country will be there, and we'll be talking options.
That's here in Chicago, you're talking?
That's here in
So you don't
Chicago.
get any trips for that one.
What is the date on that?
You could walk to it.
That's,
Metro ticket.
That's October 8th to the 11th. DSC will be on the options panel on the 8th, Wednesday.
Institutional Investor Conference.
That is correct.
That's not the Council of Institutional Investors. There's a myriad of those types of conferences out there. All right, and both Option Pit boys, I think we know what's coming up with you guys, but go ahead anyway. What's left?
September 24th, we're doing a free webinar on an introduction to the VIX and the VIX ETPs. Free hour online. Just go to optionpit.com/events to register. Should be a lot of fun. And then Andrew's going to fly back to Maine. Actually, Andrew's flying to New York tomorrow to present. Then he's flying to Maine.
Then he's doing you're making him do the dog and pony shows.
And we're
going
to give a big shout out to Courtney for giving them to us for the last week. And thank you, Courtney Giovinazzi.
Andrew, you can enjoy your booth space next to the guy selling gold coins and the guy selling oil well shares over there at the money show.
Exactly. We're just like, well, we're going to try to help you make money slow. But this other guy would like, if you just buy this, you're going to make money
just
really fast.
Just buy my oil well and my gold coins,
exactly.
and you're good to go. All right, after we besmirched enough people, it's time to wrap this up. On behalf of Andrew, Mark S., the other Mark S., Mike, Alex, and, of course, myself, I want to thank everybody, of course, here who showed up live, everybody who wrote in. We'll get to all your questions on another show, and we'll see you guys next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.